Hello, hello, Punch Card Nation. We are back. It is Berkshire Hathaway weekend, the most magical time of the year. And that's where Tom is right now. He's schmoozing and dining with some of the finest investors in the world. So I have not FOMO, but ROMO, the reality of missing out, unfortunately. But we're here. We're here. We're going to have fun. And we can talk about what's happening in the markets. Amazon is down like, I don't know, 20, 30% just in the last day. It's kind of crazy.
Wow.
If anybody in the comments wants us to talk about any particular company, let us know in the comments. Also, we have a guest here, Jason, after dinner investor. And he had some big news on Twitter recently. He was really, building the anticipation. Sold a couple positions to buy something new. And so I'm hoping he's open to sharing that with us this evening or morning. So afternoon, as in Frank's situation, morning for Quran. We're all over the world here. But yeah, why don't we kick things off with Jason? Jason, what do you got for us?
Well, first, let me say thank you for having me back on. I'm
Cheers.
thrilled to be back on Punch Card live talking investing with my absolute four best friends in the world. So it's good to see you guys. Um, Actually, Jack texted me today. He said, "Do you want to go on Punch Card?" And I just texted back, "No." Like after begging week after week, I thought it'd be funny if I just said no. And he was like, "All right," but then I told him, "I'm just kidding." So I actually bought Twitter, which I've talked about, but the one I'm building anticipation for, that's what you're asking about, right, Brad?
Yep, that's the one.
Well, I bought it 2 days ago and just kind of doing what us value investors do these days. I took a nice gain. It wasn't a huge gain, but I've already sold it. So I'm kidding. Just joking. Just joking, guys. So yeah, I put a 0.1% position in Twitter. I told everyone on Twitter that it was under 1%, well under 1%. It was literally just a tenth of 1%. Looks like an easy 12%. Looks to me like the deal's going to go through. And if it doesn't go through, I don't mind owning a little bit of Twitter, given the Quran margin of safety of the trophy asset of Twitter and people knowing how valuable it is now. But the big position, the 15% position that I sold Seritage for, that I sold Green Brick Partners for, and that this is probably blasphemy, but I sold Berkshire Hathaway for, was Google, Alphabet. I bought a 15% position in Google. Happy to answer any questions about it, but the couple sentence summary on it is that basically it's maybe it is one of the best businesses ever. It looked to be at a very fair price, and it's squarely in my circle of competence, right in the center. You couldn't get more in the center of my circle of competence. Looked like a fat pitch floating. It was so slow, right down the middle of the plate, and then I cocked my bat, hit it out of the park with a 15% position, and I'm still buying personally when it's at these prices. And I'm in love with it. I think it's one of the best decisions I've ever made.
So let me ask you a few questions. So why now with Google? I mean, I haven't been tracking, but I imagine it's come down quite a bit recently. Is that really what got you to swing now?
That's entirely it. That's entirely it. Just the price came down and I had the opportunity. I had bought Google back in 2015 or 2014, kind of around the time Monish did, but I wasn't this much into investing and it wasn't a clone. I just bought it and it was like at $600 a share. Went to $1,800 a share or $1,200 a share. I got nervous about certain stuff and I sold it before I was thinking about long-term investing and holding wonderful businesses. And I had always kicked myself for doing that because obviously it's gone up a lot since then. And it's just one of those businesses where if its price comes down, I'm going to buy it. And I wasn't like tracking it in a watch list. I wasn't doing anything like that or out of the ordinary. I just saw that they reported their earnings. Turns out YouTube, which makes up 10% of their revenue, didn't grow as much as people wanted it to grow in one quarter. And that had like a 5 to 7% maybe reaction. So the stock comes down. I'm like, okay, let me look at it. And for whatever reason, it's been down like now about 18% from its high, or maybe a little more than that, 20-ish%. And I was like, wow, okay, good time to buy.
Nice.
So,
Well, you've got
and
good company.
I looked at the price, the PE and all that, and what they're expected to earn and all that, and it just really looked like a good time. Who's my company?
Terry Smith bought Google not too long ago. I think Google and Amazon were his big buys in 2021. So I consider that pretty good company. It's also fascinating that here we are, Berkshire Hathaway weekend, right? And for Buffett, I'm pretty sure Google is one of his biggest errors of omission, right? It's a
So
company.
far.
Yeah, it's a company they were plowing a ton of ad money into and just didn't see, how incredible of an investment it could be. So
Through Geico. Yeah, through Geico in the
through
early days.
Geico, that's right.
And I think he
That's
even
right.
met the Google guys. They either wrote to him or they went and met him.
Uh-huh.
So he was aware of it. But I would not be surprised if him or Ted or Todd took a large position at some point, because I guess the PE is, when you back out the cash, maybe 17, 18, somewhere around there.
Okay.
And you look at what people think they're going to earn in just a few years, and you look at the massive amount of cash. I could see it being I could see them going into it, but who knows? Seems like a better use to me than putting money in that much money in cash.
Yeah.
It's pretty interesting.
So what's got you buying Google over Prosus? That's what I want to know.
Well, Karan, I sure had my option to buy Prosus shares out there on the market because people like you were selling. So, no, I'm kidding. I already have a 30-ish% at cost position in Prosus, and for me, I really don't feel comfortable going higher than that because of the concerns that we all kind of have. So I was happy to go into Google.
Are you rethinking that 30% allocation? Are you maybe reducing that, or any changes there?
I'm not reducing it, but I do feel some emotions about it. Like, man, like that's a big position. There's a lot of things to be concerned about, but I'm not going to sell it. I'm just not going to do it because I think in 5-10 years, Tencent is going to be fine. And I think at some point, maybe that discount gets closed a little and I feel fine with their processes management. And I had to sell stuff to buy Google. I thought about selling Prosus because it's one of my largest positions. So I could justify selling a little bit to help fund the 15% Google position or make Google a little bigger. Probably not the worst idea. I would get a capital loss on the taxes and be able to book that loss. But I cannot sell a business when nobody else wants to buy it. I just feel like that's the exact wrong time. I went through this with oil, with Ring Energy. I was buying when nobody else wanted to buy. Monish talks about that, like in Turkey, he's the only one left in Turkey. I just feel like there's so much negativity about investing in China right now with institutional money, and it's not back at all. And I just feel like it would just be, could not bring myself to sell, kind of like the herd, when everyone else is scared and no one wants to buy it. So I'm going to hold.
I think there's a little more optimism after yesterday about China.
Yeah, news came out that they're giving some concrete examples, I think, of what they're going to do. It said the Politburo in one of the articles, and that made me feel real comfortable about my investment, that the Politburo made a decision. But that's their system, and I think that's going to keep happening, because why would they ruin one of their crown jewels? So can I tempt you guys on Google? Are you guys thinking about it?
You're wanting us to vote on Google tonight, Jason.
I understand why you like it. I think it's a safe investment. I don't think the returns that it's offering are exceptionally high. I think the growth has mostly been put through that company. It's going to remain one of the best companies in the world. Definitely historically, it probably is the best business ever, in my opinion. If I had to pick the best company in the world, I think I'd probably choose Google. And price-wise, it's multiples cheaper than what it was at the trough of COVID. So say 17 times EBIT or something like that, I think it is. And I think you said about 17 times earnings if you back out the cash. So yeah, it's cheap. You look at a company like Costco and Coca-Cola and all these companies that have a bit of pricing power. They're trading at 45 times earnings. I don't think they grow as fast as Google moving forward. I think Google's got more growth than Coke and Costco do. At least I would assume that's the case. and it's half the price on a multiple basis. Obviously, they're not perfect comps, but I do find it interesting that the state of the market prices some of these tech companies like Google is. Yeah, I can see why you like it. I just couldn't get too excited. I don't think we see exceptional returns on Google, but I think it's probably a safe place to have money.
I'm curious what your return expectations are, Jason, where you see the majority of that growth coming from in Alphabet.
Well, I use Google every day. It's my day job.
Mm-hmm.
You guys are talking to the best person on planet Earth that does that, and I'm not
Fantastic.
Yeah, I'm not kidding. So it's in my wheelhouse, and for me to kind of go into why I think they're going to do well, it's just hard to kind of have that conversation. But
it's a longer conversation. Huh?
Yeah, I'm not really good at being concise about it, but I would say they've got some things going for them. The size of their search market. I was shocked, actually. I'm in Google every day. I was shocked that I've kind of spoiled it, but their revenues from search, I think you would all think they're a pretty large percent, because we always hear this thing like, can Google grow another business? Is it just going to be search and all that kind of stuff? Their revenue from search was only 58% last quarter. So they've got some other things going on, but in that search, it's an auction system. So you have one advertiser competing against another and so on. And my point is to me, it's like an inflation hedge. There's pricing power, if you will, in that, where if two businesses both have costs, but they need to get customers and they're both going to bid to show up on those search results, if one wants to raise their bid, the other one's going to have to raise their bid to go there. So I like that that's going for them. And then cloud is growing at 40%. And they have the Waymo thing, which I think I read a couple months ago was on the streets at night in California or in San Francisco. And there's a lot of things on the street at night in San Francisco, but totally autonomous vehicles are one of them. And I think that's Waymo. But yeah, I think that just the competitive nature of running the auction and having people bid helps them grow. I don't think they're going to trade at a 17 or 18. I think over the long run, I would expect them to trade somewhere between 20 and 30. And so if I looked at Value Line, and if you kind of look at what they're expected to earn in the next couple of years, and then you put on a multiple of like 25 on that, I think it ends up being a double, around a double in the near term. But I'm really not looking at it that way at all. I'm more of looking at it like, this is one of the best businesses ever. I have a chance to buy it, what I think is on sale, at a multiple that doesn't make sense for that company, a multiple that's at or a little bit cheaper than the overall market. And I'm going to buy it and just do my wonderful business holding checklist and plan on holding it forever, unless something happens on that checklist. So more of thinking for like 30 years, 40 years, 50 years, as opposed to what it's going to do in the next few years. But I did pay attention to that a little.
Jason, I hope no one uses this clip later in a future video and then links to this exact moment. I hope that doesn't happen. You know what I'm talking about.
Yeah. I know what you're talking about. Someone did that in the comments. I don't read the comments, but someone told me. It's not like I looked at the comment and saw it and then remembered it now. But people change their mind. People get better at investing, I think. And situations change, Situations change. And my background's actually in accounting. And then I transitioned to marketing a few years ago.
Nice. Digital marketing primarily, right?
Yeah.
So do the buybacks also play a...
Go ahead, Karan. Buybacks?
Yeah, do the buybacks also play a role in your thesis about investing in Google? Or is that not as much of a factor?
Like the last 3% of the decision. I made my decision when I saw the price, but then when I'm reading it and I see, they're going to buy back 40 to 70. I think Apple is buying back too, so I can't remember if they're 40 or 70 billion. But I'm like, that's a nice thing to hear. And I will say, when you talk about management, I think the CEO is great, and I also think the CFO. She came over from Wall Street a few years ago, and she really has run the communication of their just what they're doing with their capital allocation and the way they talk to investors, people have loved it. So it didn't surprise me that they're doing buybacks.
Yeah.
52 billion of buybacks over the past 12 months.
Yeah,
Wow.
and they announced they're going to keep doing that.
You know, I've been seeing a lot on Twitter about the results of Azure and how, you know, there are more impressive results than AWS. I'm curious how the Google Cloud fits into that picture in terms of cloud companies in the US.
I think they're number 3.
Yeah.
I think they're I think it's kind of like Amazon, and then it's Microsoft, which is what you're saying, Azure, and then the other ones are a little bit behind them, but they are growing at 40%, and they are number 3. In terms of the investment decision, basically it just helped me rationalize the decision and make me feel good about it, because it's not their core business, but I do like that they have this other thing that everyone's bullish on cloud, and if they're a big player in it, that's like a good thing. And I think they have the capacity to be like a global cloud player if they're not already. I read an article a few months ago about companies like Amazon, like Google, and laying the underground cable across oceans to get their cloud better and better. And I was like, man, no one's ever going to catch these guys who are already the big players in cloud. So I like it.
Nice.
SC in the comments put 2 kind of projections, I guess, on what he thinks the
Yeah,
returns
so
will
here's
be.
the first one.
And so just looking at the analysts on Ticker, they're projecting about 15% EPS growth over the next 5 years. So if you take that as somewhat accurate, obviously not to be relied on, and then they get some type of multiple re-rate on top of that, then the return starts to look interesting. I don't think, if the growth is 15%, that's relatively low compared to their history, I guess. So maybe they stay at a lower multiple. But then again, 15% returns isn't anything to, I guess, shy away from. Depends on your type of investment you're looking for. But yeah, if you are right and you think 25 times earnings is a fair multiple, then in 5 years, you get a lot of multiple expansion on top of 15% growth. So whatever the math works out to be on that.
I'm very humble about that stuff. Discounted cash flows and projected growth and all that. It's not really the way I invest. So I'm very humble about what this could turn into, like in terms of being exact. But I think I'm very much directionally accurate in terms of like what this company can do and what I think it's very, very likely to happen, and they're very likely to do over the next 30 years. I think I feel good about the price. And someone's mentioning the art of value. He has a comment about YouTube, but I want to give Jeremy a shout out. Jeremy was one of the people who guessed it right on Twitter. He kept saying Google, and also on a comment on your video, Brad, yesterday.
Okay.
But the art of value says, don't forget YouTube. Never heard of it. Yeah. So I think 2 billion users, and it's 10% of their revenue. And I think there's so many things, as YouTubers, you guys will know this. I think there's so many revenue streams and so many advancements to the product to turn it more into a social network. I think if they were doing that, or if they plan to do that for YouTube, I think there's a ton of opportunity there. Ton of opportunity in terms of different services they could offer to YouTubers and the audience, and different features they could put in here, like messaging and chat messaging, all that kind of stuff.
Yeah, I'll tell you the first thing they got to do. They got to get the spam comments, under control. Because I've basically stopped using the comments. I tell people, just DM me on Twitter, right? Because then I can have a direct interaction. I don't have to deal with all this spam stuff. So they got to sort that out. But hopefully they can.
Brad, Frank, have you been buying anything recently? Or anything interesting?
I'm doing work on a company, a small cap in the UK at the moment. I'm doing a write-up on that. It's getting more and more interesting the more I look at it. If you follow my Twitter, people can probably make the guess on that, but I'll keep it low-key until I finish researching that one. I don't want to make any too big of claims on it yet. but not buying anything yet. Just interested.
Is it a micro cap? Can you give us that?
Yeah, micro cap. UK
Is it a special situation?
No, a compounder.
Compounder. A compounder that's a micro cap, which means it could be a 100-bagger one day.
That would be getting overly excited, but it's definitely got a long runway for growth.
I'm in marketing, Frank. Forgive me.
Good stuff. No, I haven't been buying anything. But I'm very excited for 13F season, just around the corner here, 2 weeks out. How about you, Karan? You been buying anything?
No, nothing at the moment. Just sitting tight with what I've got.
Are you guys, and be honest with me, because we're not macro guys, but if you guys aren't buying anything at the moment and all these stocks are dropping and interest rates are going up, and are you guys having a feel that things are only going to get worse in the market and you're sitting on the sidelines kind of waiting, or just nothing's grabbing you?
I'm kind of sitting in a position where I'm mostly invested. I think I probably have close to a 10% cash position, which is around the time when I want to start buying something. But if I don't have something to buy, I'll just add to my current positions. I'm not the type of person to sit on the sidelines regardless of what the market looks like. If I had to get speculative about what the future 5 years looks like, it's probably rough, but I don't know that. So I stay fully invested either way. That's just my personal preference. But yeah, if no good opportunities, I just add to what I have.
Yeah, I'm just waiting for that fat pitch, Jason. Trying to be more Guy Spear-like in my portfolio.
I just gave it to you.
Yeah.
I want to get your guys' thoughts on something that's been floating around on Twitter a little bit. People are talking about, they're making the comparison between Facebook and the tobacco companies. So if you take an Altria or something, they're both similar margin type businesses, obviously completely different, but it's something that the broader population thinks of as negatively. Obviously, tobacco killing people is a more extreme example of the privacy breaches that Facebook have. They both make huge amounts of cash flow. The cigarette companies are more likely to just pump that back out through dividends, and you get pretty good returns on that. Facebook might be offering something similar with their amount of buybacks they could do. How do you think about something like that? They are just as cheap as each other, almost identical on a multiple basis. I would argue that Facebook is a much better business than a tobacco company. But yeah, how do you think about that?
Jason, you look so done the moment like Frank started that question. Well, I'm a little bit like deer in headlines. Deer in headlights. It's not you three, but one of your co-hosts doesn't let me back on the show, and it correlates to when I talk negatively about Facebook. So I don't know if they have a huge position and that angers them. But yeah, last time I was on here, I gave some honest thoughts about Facebook and got a lot of heat for it. And really, I don't think I changed anybody's mind. So people are dead set on it. But Frank, to answer you directly, some differences at tobacco companies, I know they pay a fat dividend and they say, hey, we're done allocating capital. We can't really grow. We're going to give you a bunch of cash. At the other company, they're going to do the goggle thing, and they're going to do it to the tune of 10 billion or 12 billion this year. And one of the things I see people saying about Facebook is, oh, well, they make all of this cash from advertising, all this cash. And so what if they only spend $10 billion a year on the goggles? Even if we lose all that and it doesn't grow into anything at all, the investment's going to be fine. Well, if you look at what they're planning to spend on the goggles over the next few years, I remember reading that it's not going to stop at $10 billion a year. So they're basically, you're not going to get that cash at least anytime soon. And I would say the tobacco companies have a much, much, much stronger moat than Facebook. But I would not want to be invested in either. But that's just me.
Frank, it sounds like part of what you're alluding to here is the social toll that Facebook is causing in terms of teenagers having self-image issues and, that emotional toll, that emotional psychological toll versus the physical toll that the tobacco company might take. Is that kind of what you're getting at?
Yeah, that on top of, like, there's a range of things Facebook and social media could be bad for, but the privacy breaches is a big one. Really, I don't know. It's something that I'm not too overly concerned about myself, but the broader image, I guess, is pretty negative. I think if you talk to the average person about Facebook, they would think Zuckerberg's some type of evil billionaire and Facebook's some type of evil company. That's probably the average person, not so much the typical business analyst maybe. But I'm just surprised with the similar valuations between the two companies, between Facebook and a typical tobacco company. I think regardless of how you think the metaverse plays out and this reinvestment that Jason doesn't like, it is an area for growth. And if it works out, then it's a much better business than Altria or Philip Morris, choose your company. So I don't know. It's interesting if you think the capital allocation works out, and the yield they get from a buyback, if they maintain $50 billion in buybacks, is almost as high as the yield you get on a dividend from a tobacco company. So yeah, I don't know. I just find it really interesting that they're even close in valuations, the same way as I find it interesting that Coca-Cola is trading at a higher multiple than Google. I just think the whole market is a bit mixed up at the moment.
Yeah, Frank, I'd agree with you. The market does seem mixed up, and it does seem mixed up in the sense that, like, I guess this was the worst month for the NASDAQ since 2008. And there's a lot of like stuff in the articles that, like, wow, the market is down a ton, but then there are pockets of the market where they're not down at all. So it seems like it's a very uneven market all over the place. The metaverse could work out. And I was reading this week that there's some company selling something that goes under the goggles and points on your mouth. So when you kiss someone in the metaverse, you feel wind and a sensation and mist on your lips. So that could definitely work. I think maybe
that's the one thing that's going to sell Jason and turn on metaverse, when he can kiss someone virtually.
See what that feels like. So I think it is I think the market's negative on tobacco companies. That's why they have a low multiple, because their businesses are not going to grow, obviously. But there's a lot of positives to them business-wise: repeat customers, revenue that you're going to get, that you can be certain of, and then the high dividends and the way the companies are run. So it's like a bad business, but people feel good about what's there, what's left of the business, the investors do. And then on Facebook, I think the market is worried about them spending all that money on something that totally could not work. Totally. Like if you looked at any other CEO at any other company trying to do what he's doing in terms of that amount of capital into something so unproven, I don't think the market reacts well to that. And then I think the market is extremely worried about future growth, both in terms of users and then revenue, because of the ability for them to have a strong advertising as they did in the past, given the changes with Apple and also what's going on with TikTok and stuff.
So a few different things on growth. I think, say the Facebook Blue, like the actual Facebook app, that growth is probably very, very limited. Might even decline over time. Instagram would be getting close to that. But Messenger and WhatsApp aren't monetized barely at all. So I think, assuming they can find a way to successfully monetize that, I think there could be a lot of growth there. And then if you're looking at the average revenue per user in markets outside of the US, particularly like the Asian region, there is room for growth there as well. That's getting a bit speculative, and I don't know how that looks moving out. I guess an expert might be able to more accurately predict that, but I would just assume there'd be some growth there. And then with the whole Oculus metaverse, that type of investment, I think the market's got a negative value assigned to that right now. I think if you assume that's a zero, that's probably a good thing, because the market's really pessimistic on that. So I wouldn't be, as an investor in Facebook, which I'm not, I wouldn't be worried about the metaverse. unless Zuckerberg, say, keeps doubling down over the next 3 years and it's not working out. There's ways it goes downhill, but at the current state, I don't think that amount of money is too concerning yet.
I will say I'm a guy who just put a little money into Twitter, and obviously revenue per user and growth and all that. I'm not standing on good footing there. So the thing with Facebook is they have this many users, this much attention, and like you're saying, people are very negative about their products, but people keep using them every single day. So if they can just do some tweaks and figure out how to grow again, I think the market would. I think my take is the market and investors want Facebook to succeed. They want to have a huge company they feel safe in that's growing again, and that they can make money in because it goes up steadily each year. Not the kind of way I think you guys invest, but I think kind of the institutional investors, I just get the sense people are kind of rooting for them. And if they could just show them what the street wants, their stock would shoot up, because they reported their quarter this week. And like, I thought it was all bad news pretty much, but then the stock went up 18% because the market was able to cling on to something they like. 300 million new users. I think it was 300 million new users? No, 30 million, sorry. I think it was 30 million. But they loved that, and they thought that was worth 18%. So I could see the stock doing well, but it's just one of those too hards for me.
So I want to point out, Jeremy brought up the social toll that we're talking about with Facebook. Gaming companies. I've heard Charlie Munger speak negatively about gaming companies in the past. There's speculation that's why he doesn't own Tencent. And I think Guy Spear has also mentioned gaming companies as kind of draining society of its young, ambitious people. What do you guys think about gaming companies?
I think you can make an argument against almost any company and the negative impacts it could have. And I should clarify that I don't think Facebook is even anywhere near the extent of evil that a tobacco company is when it comes to a toll on society. One's physical death and one is a bit of debate of what's ethical and what's not. So a big difference between the two. Gaming companies, I don't know. I don't think that's too much of the company's fault, more so than the consumer's choice, I guess. You could abuse anything. Gaming is one of those things. So I would turn that more so on the consumer, more so than the company.
Yeah. Just I'll clarify, it was 30 million users, obviously not 300 million. But I'm taking kind of a humble stance on gaming. It's not something I've been into since I was a little kid, a long, long time ago. And gaming's changed a lot since then. And I think there was a stereotype back in the early 2000s that someone a male just games in his room all the time and doesn't go out and all that kind of stuff. But it seems like games are so much more social now. And I think with the internet and things like Twitch, it's how people meet people and in a lot of ways. And I don't really have a negative feeling for them. But that said, like, if I'm raising a kid, I probably wouldn't feel good if they're playing video games more than a acceptable level. And then I kind of look at video games like a way for people to kind of escape and take a break from their week and their life. And if they do that for 1 or 2 hours a night, as opposed to watching one of the boring late night shows like people watched in the 90s, people don't do that anymore. They're playing video games.
So a big thing that happened this week, it sounds like Elon is going to be successful buying Twitter. Curious what you guys take on that is. I know, Frank, Karan, you've owned Twitter in the past. Jason, you're one of the larger shareholders in Twitter now.
In my household.
Yeah, I should have stated that. What's your take on Elon taking this thing private? Is it going to happen?
I had a question about your Twitter investment. Why didn't you get into Activision Blizzard if you're looking at merger arbitrage?
It just didn't come across my radar. I had heard the names Activision. I heard the name Blizzard, like that combined. But I'm not in video games like at all. My only way they're even on my radar in terms of reading about them is with with my 10-cent reading that I do. So I hadn't even followed Activision Blizzard. If you asked me what the ticker was a few months ago when that deal got announced, I would have never known. And then I don't know exactly what the spread is right now, but that one does, I think, have like some
more than Twitter, close
more
to
than
20%.
Twitter. So it just doesn't grab me for whatever reason.
And it's all cash.
I don't know. I'm not really a merger arbitrage guy, but I like to try that every now and then. And I also feel fine with Twitter. Like I just kind of wanted to get into Twitter, but this is something some people missed on Twitter, like a lot. They missed it big. I said it's a much less than 1% position on Twitter. Like it's a 0.10. It's a 1/10 of 1%. So it's not really, I don't even know if you call it an investment. It's just I had a little bit of money lying around. But for your question, Brad, I think the deal, my take on it is I wish I could remain a shareholder with Elon Musk being the lead shareholder and running the company, because I think that company run correct could be worth $500 billion versus the 50 or whatever it is today. So I think he's going to do very, very, very well with it. And I think the product's going to do very well.
I think my take on the future of Twitter with Elon owning, if it does go ahead, I don't think much changes. I think Elon over or underestimates how hard it is to make changes in a company like Twitter. I don't think the Twitter guys weren't trying. It's not like they weren't trying to monetize this, weren't trying to do a range of different things. I think a lot of the promises or ideas that Elon's throwing around are just will float off into thin air. I think not too much would change. I don't think it actually means too much to the general user or the overall platform too much.
This is a guy who's landed 2 rockets backwards on a floating. I don't know.
You're right. You're right.
I mean, he must think it's important enough to not just devote the money to it, but also what's definitely going to be a fair amount of time to it as well. I'm fascinated to see how this unfolds. What do you think, Karan? You seem to have some kind of opinion about it.
I'm waiting for the Dogecoin integration. That's what I'm waiting for.
I think Dogecoin went up fairly significantly when the deal was announced.
It went up like 22% on the day that this was announced. I think Elon's not going to buy Twitter. I think it's going to fall apart.
I think that's likely too. I think that's a big possibility.
So the breakup fee is 2.5% of the full deal. And if it doesn't close, sure, he has to pay the breakup fee. Maybe he can get out of that, but I don't think this deal closes. So
why not, Karan?
I don't know. It just seems like it doesn't.
I didn't think it was serious. I didn't even think it was real. When I first started hearing about it, I was like, surely not. And Elon being the Twitter troll he is, it just seemed like, I don't know. Didn't seem likely, but here we are.
It's interesting to see the different perceptions of Twitter for Karan and Frank, you guys being outside the US, and then Brad, maybe you feel the same way I do being in the US, but it's like kind of get the sense from you guys internationally that it's like, it's a thing that's happening. It may not happen. It's kind of silly, but then on the ground in the US, given our polarized political environment, it's like a huge story. It's a huge deal. Both, just a lot of people have a lot at stake with it. So
I feel like if the repercussions for getting out of the deal were higher, I would be more inclined to believe that the deal will go through. But just because it's kind of easy for Elon to kind of navigate out of the deal, that's why I think if he has the option, he would probably opt out of it.
So you think he's in too far? Like he didn't think it was.
I think he's not in far enough. That's what I'm saying. I'm saying he can still wriggle out of it. So, and I'm sure there's better ways to probably spend $40-something billion.
So you think he's gonna realize, he's gonna have some realization, I don't actually want to bark up this tree. I'm out of here.
Maybe he's got other potential investors who kind of get interested throughout this process, and I think other people also might join in. I don't know. I feel like the deal structure might change, or something would change, because it doesn't make sense to go out and spend 40 something billion on Twitter when you've got like all the AI stuff that Tesla's been developing
and 22 billion worth of debt to make it. Is that right? Around that price? I don't know.
It's going to take a lot
like
of debt.
that.
Yeah.
Well, I've been seeing a lot about how, Tesla doesn't advertise, right? So much of Tesla's growth has come from, Elon's presence on Twitter. I feel like that's a substantial factor for their growth. And so I'm wondering, 5-10 years down the road, how valuable of an asset is Twitter to Tesla at that point? I don't have the answer, but it's fascinating to think about that for me.
If
Brad,
Tesla was acquiring Twitter, that would be very different. That would
If Tesla was buying Twitter?
Yeah, directly, rather than Elon going out and buying Twitter. That'd be a lot more interesting.
So we have a question here about oil and gas, right? The stuff that makes the economy run. Have you guys gotten into any of this? Obviously these companies have done very well recently, but they had gotten clobbered. Is this on your radar at all, these oil or gas companies?
Well, I have a big position in Ring Energy. That's through growth, Brad, not through cost. Done very well with Ring Energy. And mostly I'm in hold mode now, even though I think it's undervalued because I'm not selling.
Tell us about Ring Energy. What do they do? What's the high level thesis?
Yeah, they're in the Permian Basin down in Texas and New Mexico.
Okay.
They have oil. Most of their oil is oil in the ground. They haven't drilled for yet. Tons of reserves, and they're a company that's kind of an early stage oil and gas company, even though they are now up and running at a very, very good rate and growing. But I guess the company's been public for a long time, and then a guy came in there and kind of took over this public company and redid it, and so it's like a different company than it was in the past. Everything was on that they were on plan to kind of run their plan, and then we had the oil crash of like 2015 and 2016. Then we had coronavirus, and the company had debt. Almost didn't make it through that, but they've made it through. And basically, they're just a small oil and gas company down in Texas and New Mexico. And I think their price compared to the reserves, once you account for the debt, has been like very, very undervalued for a long time. And it's not as undervalued. But that's what they do. They do conventional oil as opposed to shale. So it's a different kind of rock. It lasts longer. And most of the public oil companies now are shale. And they have very, very low break-even rates, like $25 to $35 a barrel in order to drill and make money or break even. And it was a net asset value play. And that's one. And then there's another one that's in the same area called Pedevco. And actually the guy that runs Pedevco and owns 60% of it has shown up in the Ring Energy filings as a over 5% owner. And that's a company with no debt, with 20 million of cash. The market cap is around 100 million. And based on like $60 oil, their reserves are worth, I think, around 150, 160 million, I think. But of course, oil is not, a lot higher than that now. So that one's a smaller position. Ring's one of my top 4 positions. And I'm very much in that. Yeah. In that world. Yeah.
How about Karan and Frank? Have you guys looked at those areas at all?
No, I get why people are interested, but it's too hard for me. It's in the too hard basket. Maybe it's something I should try and change, but for now, it's a pretty hard pass for me. Always has been, and I think I'll probably always pass on that stuff. Not to say it won't work out. There's a lot of smarter guys than me interested in it and making a lot of money from it. Josh Young is a guy on Twitter that's had incredible returns, 300% last year or over that. Jeremy Raper is involved in a lot of the smaller names in the oil, gas, coal type industries. So yeah, there's a lot of ways it works out, but I think I'm happy to pass on them.
I had a position in Gazprom for a brief moment, and then we all know what happened there. So
Yeah.
I kind of stay away from gas and oil in general. But I think between the two, I think gas seems to have a better future moving forward. So
You guys want to talk Carvana?
Yeah, maybe we should riff on Carvana.
Look down, because that's where their stock price is going lately.
It's going to keep going, huh?
Well, I was going to put this out on Twitter, but I didn't want to ruffle any feathers. I was going to ask, and maybe you guys would be happy to answer this. Carvana's drop in their share price now. To me, it looks like a company that's either headed for bankruptcy. That's what the market is saying, if this many people are selling. Or are we going to wake up in 2 or 3 years, if they're going to be able to, with this preferred stock and debt stuff they're doing, to get enough liquidity to last another 2 to 3 years? Do we wake up in a world 3 years from now where they are the dominant option in e-commerce car transactions in the United States, which to some extent they are now, but CarMax is also in the game and some other people are, but are they just absolutely dominant in 3 years? Are they profitable and then continuing to still grow? And it's like, if that's the case, the stock price would obviously be up a ton from where it is here. Is it purely just too hard in the too hard pile for you guys? Because that's kind of where I'm at now. But for some reason, I can't look away. And I think part of it is the massive drop. Part of it is like, yeah, people are going to buy cars online. I just had a friend do it with Carvana. And then part of it is the very talented investors that have put a lot of money into Carvana and wondering if they're right. So what are you guys' thoughts on Carvana, and how closely do you follow it?
I just, without choice, I keep hearing about it. A lot of the people I follow on Twitter are talking about it. And I just read through Cliff Soson's letter that just came out recently. He bought more shares when they were doing that capital raising. He's still very bullish. He had a kind of appendix onto that letter breaking down the unit economics. The reason I passed originally was because the unit economics are hard to understand. He did break them down, and it's hard to deny what he's saying in the letters, and it does sound very interesting, I guess. He thinks they make about 2,500 off the top of my head per unit that they sell. That's how the unit economics work out, in his opinion. If that's true over the long term, then Carvana is going to be a great investment, but I can't get there in the unit economics myself. I'm just reading what he's saying at this point. It's probably worth doing a lot more work, but yeah, it is towards the too hard side. I think there's a huge tailwind in that industry. I think without a doubt in 10 years' time, more people are buying cars online than they are right now. I think it only makes up about 1% of total used car sales are currently through these online markets. So I think long-term, that's likely to be at least 10% as a guess, but maybe even a lot higher. So there is a big tailwind behind the industry. So I could see how it could work out, but the debts concerning the capital raising, all of that stuff, they're paying about 10% interest on their debt that they just took on. They made that acquisition at pretty poor timing, as some of these kind of supply issues kind of ruined a lot of their profitability. So there's a lot of downside kind of tied in there, but yeah, I could see how it works out, but it's pretty hard to wrap your head around, I think.
Yeah, Cliff Soson, that was like a 40% position at the end of the year in his 13F filing. Now, he didn't put that much into it. It had run up quite a bit, but it's not hard to imagine that he could be looking at it through rose-colored glasses, right? He really wants this thing to work. I guess he also talked Rob Vinal into buying into Carvana. Those two are friends. So yeah, it'll be really interesting to see how that plays out.
It's currently 25% for him now after adding to it. Obviously, it was down significantly, so that 40% decreased, and he put a little bit more back into it.
Yeah.
So 25% roughly position. And for people who don't know Cliff Soson, since 2012, I think his fund started, he's had a 30% annual return. So,
right, so like doubled the market.
of modern day investors, he's top of the list probably.
I would be curious what percent of that 30% was made up from Carvana. Just because we're talking about Carvana, and I guess his results, maybe in a large way, will be kind of dependent on how this works out. I just can't get over I don't know what the margin of safety is. That's kind of my thing. Like I kind of save the last 10% of my portfolio for what I call speculative tuition, where maybe it's like I can't really I don't fully understand the business, but I want to learn and I have a hunch. And I kind of feel that way about Carvana in some sense. Like, yeah, that market's going to grow. They're leading it. Part of me thinks like some of the problems that they have with some of the complaints online about the parts of buying their car, parts of the process. Well, if they figure that stuff out, which is like hard stuff, then it's going to be hard for other people to figure out. So maybe that is like a moat creation that we're watching. So I have that hunch, like, yeah. And then I see these very smart investors getting into it. So I want to buy it. But then the other side of me is like, well, I don't really buy things without margin of safety. So do you guys have any thoughts on their margin of safety? I can't really see it. And this looks like an opinionated comment. Yeah.
I want to speak to Jeremy on here. So the whole business is built on the assumption people will continue selling their car to them for significantly less than the blue book. So my dad actually sold his car to Carvana. He got several $1,000s more than he could get for it anywhere else. So that's, from an N equals 1 perspective, this isn't what I'm aware of, but
I'll double our sample size. I sold a car recently, and I went to Carvana to see what it was worth, and then I went to CarMax, a company I really like as a customer and a company I trust, and went to see what it was worth for them. Same exact price, and CarMax I could drive 10 minutes away, sit there for 30 minutes, and then walk out with a $20,000 check that day. Carvana, I would have to commit to all this stuff online, 2 or 3 days. Someone's going to hopefully show up at my house. It's a company I've never dealt with before. I don't trust them. To me, it was a lot better experience going with CarMax. And that's another thing. I'm worried about the competition for Carvana. If you look up Lithia Motors, I think it is, and Asbury Motors, David Abrams owns a couple of those companies. They're really, really big car dealership chains, and they're starting online stuff. And then CarMax, to me, it does the exact same stuff Carvana does from what I've seen. So I don't know how strong that moat is at all.
Okay.
Can we just backtrack a little bit and get the name of that part of your portfolio again? Because I like that. The Specu something.
Well, I did talk about it on Tea Time, which I know a lot of your audience watches, and I've written about it on my website, and I've even tweeted about it. So, Frank, I'm just a little surprised and hurt that you don't know what this is that I'm referring to. But I wrote an article and talked about the different things that make up my portfolio, the different styles of investing that I do when I buy businesses. One of them is net asset value plays. The other one is buying growing businesses at fair prices, something like Google. There's a heavy cloning aspect to almost everything I do. And then the other little part of what makes me as an investor is what I'm calling speculative tuition. Up to 10%.
Can I just check? You're in marketing, right? That name comes from that marketing degree? Yeah, cool.
Pretty good compared to buying what I don't understand. So that's what I like to tell myself. But I like to save that last 10%. I'll give you a couple examples. Twitter, Navios Maritime Partners. It's selling for a PE right now, a PE of like 1.7, 2 years in a row, because they have a huge backlog. So it's very, very cheap. Their book value is higher than the price of the company, but book values with shipping companies can change very quickly, from what I understand.
They're in Greece, right, Jason?
Speculative tuition, Brad. Who the hell knows? I'm pretty sure they're. Let me put it this way: as an American, they're somewhere around there. I know they're not based in the United States. So somewhere around there. And I've been seduced by the industry, and I want to get into it. I want to learn the industry.
It's a sexy industry. I mean, who doesn't want to get into shipping?
Exactly.
Right?
Oh no, are you being facetious or you mean it? Once you feel you're out there on the open waters, you're participating in global trade. You're talking
you got to
about
deal with
Greece.
pirates. Yeah, I get the appeal.
Yeah. So and so I put like a 3% position. The CEO's going about things differently than other companies in the industry. Instead of giving out all the cash while times are good and shipping rates are high, she's trying to grow the business and reinvesting in the business and trying to make smart moves. So I want to do stuff like that, and I just can't help but do it. So I'm limiting that kind of investing, that style of investing. I see Intelligent Investor on your bookshelf there, Frank. He talked about speculation versus investing, and so I save a little bit of my portfolio for speculation, but I like to do it when I have a hunch or have a way to learn something. So that's where that name comes from.
What percentage?
10%, 10% of my up to 10%. So if I see Google's and Prosus and all that kind of stuff all day long, I'll sell that last little percent to go buy that stuff if I want to. But it's up to 10%.
Cool.
And the other example would be Coupang from South Korea.
Coupang. Okay. Yep. The Amazon of South Korea.
Or better.
Have you looked at Zim at all, Jason? I guess that's a shipping company as well. There's a guy on Twitter that I follow who was pretty bullish on Zim. But I haven't looked at it.
The first shipping company that I looked at and what actually caught my eye. So I was reading an article in the Wall Street Journal about shipping rates, and something just in that article made me want to go to Seeking Alpha and look up some shipping companies. And I saw that Zim was like selling for like a PE of 1 or something like that at the time.
Yeah, still
and
is.
I was like, and I was like, what is going on? And so I got really interested in Zim, and then I kind of read for a couple of days, and I was like, well, I'm having a hard time understanding them fully and like what the strategy is and what the next few years look like. And are they going to be a PE of 1 in a couple of years, or are the rates going to go down and all that? And then I found Navios Maritime Partners, and it just clicked with me a lot more. But Zim's definitely something that I was aware of.
Cool.
Yeah, 1.5 times free cash flow, 1.5 times earnings roughly. Pretty insane.
Yeah, I'm curious if we're going to see Buffett get into another shipping company. I don't see the shipping industry as being this kind of long-term compounder situation.
You mean Monish? Brad, you mean Monish, not Buffett. You said Buffett.
Oh, sorry, I mean Monish. Yeah.
It sure seems like he is focused on compounders right now.
Yeah.
That he holds for 2 months and gets out of.
Well,
may I take a stand? Triggered.
Oh, Jason's triggered. Speak.
May I take a stand here and talk about Monish and this meme or whatever you call it that's going on?
Yeah, I want to weigh in on it too. You go first, Jason.
So someone laid it out very clearly. I forget where I saw this in the comments or something, but they had said essentially the trade, if you will, from Alibaba to Prosus, it was not a sell. He took money that was in Alibaba, he moved it to Prosus because you kind of look at it like a similar investment, but he likes one better. He moved the same amount of money that Alibaba had come down to into Prosus, and then he got a tax benefit from it with the booking that loss. So that wasn't a sale. And then Seritage, he bought it at the trough of coronavirus, and he made a return on it, and he's out of it. And he obviously has a ton of international stuff that he doesn't sell. And you look at how long he's held Rain Industries and all that, and I got it out of my system there. So I hope I made the case. Brad, what do you have to add? I
agree. I mean, he's not doing. He doesn't have a lot of activity. I mean, he said in an interview, he'll probably buy 1 to 3 things a year. Buy, sell 1 to 3 things a year. He hasn't exceeded that, at least as far as I can tell. I think people just have it. Some people have it out for Monish, right? And I'm not exactly sure why. But Yeah,
Monish
curious.
doesn't care if people have.
No,
it
he
out.
doesn't care, but
Does it?
other people seem to care.
Yeah.
Jason cares.
Oh, I
He's not
care.
bothered.
And
He's not watching this.
No, he's not.
yeah, 30% of my portfolio cares and racist. So
Right.
yeah, Monish is the man. Monish is on my Mount Rushmore. It goes Buffett, Munger, Pabrai, Spear.
What about Nick Sleep? I see Nick Sleep up there. He's crushing the market without doing anything and probably outperforming everyone on that list. Just saying.
It's not a guy. He's I obviously respect and am trying to learn from what he did with Amazon, but he's not. It's not emotional for me. He's not one of my
It's
heroes
not that.
because I just
not
didn't know him.
Amazon, like the Costco right now. So previously, for the past 5 years, Amazon was carrying the portfolio, but now you can see the Berkshire and the Costco positions kind of, holding up the portfolio despite Amazon dropping. So
I don't have a connection with Nick Sleep. I haven't watched weeks and weeks and weeks of time with Monish in my ear on the YouTube videos and stuff. So one of my heroes, and he's not a trader.
And what about Lilu?
He made a genius move from Alibaba into Prosus, which I cloned, and he's a genius for bringing cloning, putting attention on that, and teaching me that. Triggered.
What about Jesse's comment? What about Lilu? Is he not on this Mount Rushmore?
What about Lilu?
Because my Mount Rushmore, I have to be able to look at my Mount Rushmore. I have to be able to see it. And when you look at Lilu's assets under assets under management versus what you see in his 13F, there's just nothing for me to clone. And he doesn't give many interviews. And I've watched the 2 or 3 interviews he's done, learned a lot. But the guys I clone, I can keep cloning at least for now. So
I think Lilu's on their Mount Rushmore, like Monish and Charlie.
I think so. Yeah.
Triggers down, yeah.
Yeah. Let's see.
Comment about K-Web.
Sorry. Yeah. What about K-Web? Somebody's pinging you here. Manu,
Yes.
That's what you did. Sold a little Prosus, moved to K-Web to get a little bit more diversification across Chinese tech, right, Karan?
I feel like buying Chinese tech now is like buying, I don't know, commodities in 2008.
Nobody
end up doing decent.
Nobody else wants it, and when nobody else wants something, it's probably at a good price.
Yeah. Or it's going to zero.
Yeah, the only thing that would make me sell out of Alibaba at this point is like we find out they're a fraud. The actual amount of cash that they have is not, matching up to the financial statements. Yeah, it has to be obvious outright fraud for me to just kind of sell out at this point.
You just introduced that to the world, Karan. I had never thought about that. And I honestly, that would not be good for their stock price if some news came out. Even if it wasn't all 40 billion, even if it was like just 1 billion of it, it would really hurt the stock price.
Yeah. That would get me to sell immediately.
SC makes a good point here. These are the guys we should be tracking. We got to find these guys. Are they in the Discord?
I cannot put little guys on my Mount Rushmore because I'm trying to compound like Buffett for 70 years. And the strategy that some people do when they get 40% a year, it's not sustainable. And it's really, really hard, I think, to do that year after year after year. And the stakes become high because let's say you do compound at 40%, and let's say you get to $10 million of net worth, and let's say you're like 40 years old. Are you really going to put your net worth in some of the kind of companies that get you and some of the risk that you might have to take, which you may not even be aware of when you are trying to get 40%? I'd rather kind of get 12.5% for 70 years and have it be really, really, really easy. Charlie Munger style. So as much as I know a lot of people talk about those guys, but they don't impress in me much. Will Shania Twain comment for the missing man?
If someone is compounding at 40% and monthly contributions have an impact on their asset allocation, it doesn't make sense, because if you can compound a fixed pool of capital at 40%, that's impressive. But if you keep adding monthly amounts and you always have cash coming in, it doesn't count. At least not to me.
Yeah.
I'm going to take the other side of this stance here. I actually agree with SC mostly. I like to source ideas from some of these guys that are managing much smaller accounts that are generating much higher returns than anyone that we're looking at in 13F filings. And part of the reason they're able to generate returns, in my opinion at least, is that they have a small amount of money. The people that you're probably cloning, your Mount Rushmore that you're talking about, it's almost impossible for them to generate these returns. They're limited to a select few companies. They probably are happy with a 12-15% return, but I don't think it's fair to say that these 20-30% returns aren't possible and sustainable for smaller investors. Obviously, once you get to a certain point, then you turn more conservative, but you're better off starting off with 10 years of high returns and then maybe looking at some of these larger companies. At least in my opinion, I think it does involve more risk, and I'm aware of that while I'm trying to do this. But I do agree with SC for the most part.
Yeah, I was just one point I want to make is that I agree with you. It's impossible, for guys with the kind of money Buffett's running, and even when you're running like 500 million to compound at that rate. But that isn't to say that you can't get some absolutely amazing ideas from the billionaires, because like if you look at Charlie Munger, what he did in the Great Recession around 2008 through the Daily Journal and bought those banks cheap, and then
Wells Fargo.
Yeah, Wells Fargo, and I think a couple other ones that he's just held. And then I look at what happened with Apple and me cloning the Berkshire guys, because it was more than Buffett at one point, but now it's just Buffett. And what that's actually done for my life, it's like that was a huge winner for me. I don't know what the compound rate has been per year since 2016, but it feels like just better than I could have done with any other idea. But there's definitely that difference out in the online value investing world. The small guys that are looking at the kind of classic value investing, and then the rich guys, if you will, kind of focusing on compounding. It does seem like everybody gets there in the long run when they get older. They tend to go towards the compounders.
I think almost any of the super investors that you like to name all started off in these smaller illiquid companies generating much higher returns early in their career, including Buffett.
Yeah.
I think for us to have smaller amounts of money and not try to do what they did to get to where they are, I think is a bit of a mistake. But if you're about preserving capital, then fair enough. I think probably own an index or maybe do what you're doing at the moment. But I'm trying to chase outsized returns, and I think the best way to do that is find spots in the market where there are inefficiencies, and I don't think there's many efficiencies in large cap companies that the biggest hedge funds in the world are analyzing on a daily basis with all of their resources. I think and that's not to say they don't come along. There are inefficiencies in those companies, and you can get them. I think that a lot more common in the smaller areas of the market and the different markets around the world that most people aren't looking at.
Yeah.
But Frank, I just want to jump in and say that what makes it hard, I think, for someone like me that looks up to these guys are my heroes. When they talk about making the switch from the cigar butts to the compounders, they are so convincing and they're so believable and they're so high conviction on that it makes me wonder if they could go back and do it differently. Would they go into compounders from day one? Be curious on your guys' thought on that. But I guess my point is that, or I have a question. Do you think these super investors, the way they talk about compounding, do you think if they could go back, or if they were starting today with $10,000, if they would go into compounding, or at least do it more than they did in the past? That it seems like they would, but it's really hard to tell.
I think they wouldn't be investing in compound, or like they would take the occasional compounds. I don't think they would avoid a great company at a cheap price if it comes along. But Buffett, I guess we're going back 20 years now with that quote that he said about being able to generate 50% annual returns that was tied into how he was investing during the 50s and 60s, 50s specifically, which is when he was looking at these special situations. He was looking at stocks below net asset value. I think in today's market, he would be more towards these special situations, maybe even looking at some of these non-public ideas as well. But I think they do sell the idea of moving towards these long-term compounders when they reach a certain amount of capital, because they have to. They don't have a choice. That's their only opportunity pool. If they want to keep generating great returns, that's the best way to do it with that amount of capital. I think
as you're talking, I'm really curious what Charlie Munger was doing in the early days. I don't hear that talked about much, but it seems like he really brought this idea into the partnership with Warren of buying and holding great companies, right? I'm wondering if that's what he was doing in the early days.
I could speak to that. He met Warren Buffett at a dinner. Warren Buffett said, "You're too smart to be doing the law. You should be an investor like me." He went home to California and he set up an investment partnership, just like the Buffett partnerships. And he did it for like 10, 12, 13 years or something like that. And he had amazing results. And then in 1973, 1974, I think he went down by a quarter or half or something like that. And he gave the money back to investors. And I think that had to be a searing episode for him of like stress and trouble and all that kind of stuff. Because even though his rate over those 13 years like crushed the market, I think just seeing those kind of losses in a couple of years and doing it with other people's money, I think maybe that's what influenced him. Maybe also stuff like See's Candy influenced him in going the other direction. Just looking at my own results, the Ring Energy that I have left that I haven't sold, so it's the lowest cost basis, so it hasn't been this good, but it's the lowest cost basis. I'm up 461%. So Frank, when I look at my own results, the best results have come from the net asset value kind of small cap stuff. But it's to me, it's that stuff's hard. It's like extreme, it's stressful, and it just feels so much easier to just go, yeah, Google's a little undervalued and I'm going to ride with their success. So I go back and forth, and my portfolio reflects that. I kind of do both.
And just touching on what Charlie Munger was doing, he was more inclined to the long-term hold positions. He was a bit more influenced by Phil Fisher, but it was still these smaller liquid companies. I don't think it has to be a high turnover strategy. I just think the advantage is in smaller, less followed, liquid companies, not just a special situation or a net or whatever it might be. There's lots of different ways to do it. And it could be these small cap compounders, which is probably the bulk of my portfolio. That's mostly what I'm doing, I guess.
Yeah.
So I'm probably more like an early Munger than an early Buffett. Buffett was a lot more complex with what he's doing. These what he called workouts or special situations were very complex. And then the net idea, I'm not as convinced works in a market where there's so much coverage. I think it was better when
you should short the net nets now. I think if you shorted a basket of the current net nets, you might do well. What's left of
I would disagree with that one, but I don't know. I think any of these big fund managers would switch what they were doing if they had less money. Greenblatt had his best results in this type of strategy and stopped taking in capital so he could continue to do it. And as soon as you reach a certain amount of capital, you suddenly become a more safe, conservative compounder type investor.
Yeah.
But even in his letters, in his partnership letters in the 50s, Buffett talks about he's made the most amount of money in the generals, in undervalued securities.
Yeah, the generals were
that's
the net
what he
nets,
says, and the examples he gives are of that's some map company,
Sanborn,
yeah, and Dempster. So again, they're not very complex.
Karam, what did he say about Sanborn and Dempster? Did he make the most money in those, or did he make the most money in
those are just examples he gives because he was closing out of the positions. But one thing I remember distinctly is when people keep saying that because he was smaller, it was easier for him to, find deals. He was arguing that as the fund got bigger, he was able to take control positions, and that was a benefit to the fund. But no one talks about that. Everyone says that, Buffett was investing in illiquid small caps, but that's not how I read the letters, at least.
A lot of them were these companies that were the generals, like you said, these very cheap companies that turned into control positions because they had the amount of capital to do that. It wasn't how he went into a lot of the investments, including Berkshire Hathaway as an investment. It started as a general and turned into, what did he call them? Just control. So he had the controls, workouts,
General
and
to
generals.
private owner or something.
Yeah. And the generals were over 50 or 60% of the portfolio. And that was just simply the Benjamin Graham influence for the most part. It's the workout area that I think is the more complex area. Not always. Sometimes that's not the case. But I don't think anything he was doing can't be replicated today, at least to some extent. And it's more interesting to me than what he's doing right now.
Would you guys say Seritage is a workout?
Depends how broad you define your special situation. Some people would be really stuck on the language of what Greenblatt put into his book with these different arbitrages and spin-offs and all of that. But I do put it in that broader basket of it's not the typical investment. There's some type of assets that are hidden that the market's not recognizing would be the case for Seritage. Not that I agree with that. But.
Seritage is a burnout. It's not a workout.
Yeah, something's got to work out for Seritage before anybody gets any money, right?
Yeah. I sold it this week, so.
Yep.
C'est la vie.
Really?
Adios, amigos. Have a good time, everybody.
Jason.
I don't miss it.
And then now you sold it again. You were out of it, right?
Yeah, so I was out of it, and then it came down to like $10 or something, like maybe 2.5 months ago or so. And right when it was down like that, news came out that something came out with like making it clear they were going to basically try to sell off assets now. And I was like, oh, the price is way down, and they're going to take action on this stuff quick. Yeah, let's do it. And then I had a better opportunity with Google.
Starting to sound like Trader Monish right now.
I can't be triggered any more than I've been triggered over the last 2 months.
He's fully triggered, Frank.
Yeah, I'm fully triggered. Yeah, your comment earlier was the last of the triggering.
Broke his back.
But Frank, I get a lot of comments like that on Twitter. They call me trader after dinner instead of after dinner investor. Anytime I buy or sell stock, and it's like so unfair because like I've held Apple since 2016, would like not selling it at all. I'm sitting on Racis as long as it takes. And look at these comments. You sold it the low. Well, I guess, yeah. Okay, we'll leave it there. I'm not going to talk about it.
I feel like the returns speak for themselves at the end of the day. If your returns are good enough, there's not much to say. Yeah.
Brad, are you fully in the compounder camp, or what's your kind of take on that right now?
Yeah, that's kind of where I'm trending. I just want to find a business that I actually want to learn about for many years and grow with it. So yeah. No tension at all.
No. Trust me. Compared to the other co-hosts that are not here tonight, no tension.
Who will not be named? Not be named.
Frank, I respect Frank so much because Frank, you give your opinions and you just have this. You seem very skeptical about things, and you're not just going to take something because someone said it. So I love running stuff by you. And I love the opinions you give.
You speak your mind, Frank. I appreciate that too.
Yeah.
Even when I'm the minority in here.
That's fine.
I'm going to do it.
Yeah. All right, guys. Any last minute burning questions? Hit up that super chat and we will make sure to get to you. Anybody else want to say anything about what's happening in the market? A little encouragement for our compounder bros out there who are just getting slapped around in the markets?
I would say if you can't learn something during this market, you're not going to learn. So even if you're sitting on some big losses, let's reframe it. And Carson, no worries. He apologized, and I accept apologies. And Frank, they're going to say the same thing about you they said about Ben Graham. They're going to say, Frank and Ben Graham, they talked about the values, the cigar butts and all that, the special situations, the workouts. But when they look at what made Frank the billionaire he is, it was Kelly Partners, the compounder.
That's it.
I should clarify that I do like a good compounder. I just like small
Yeah.
companies. That's my
Yeah.
main bias in the market, not so much these.
And I'm the exact
workouts of-
opposite. I should clarify that I like the small stuff too, but I have a bias towards the big easy stuff.
All right. Well, we will wrap it up there. I hope everyone enjoys and can tune in to the Berkshire Hathaway meeting tomorrow. I'm sure we'll cover some of that in our next episode. And signing off. Thanks everyone for watching. See you next week.
I'll just promote my stuff.